Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30, which the Dow Jones was closed last night, so it's pretty much the same old sort of story, but I'll just sort of go over it a little bit, is that we can possibly have a top in through here, but would need a clean break of the 13,000 and that retested as resistance to sort of confirm that price action because of the lower highs through here. It could have that possibility in there, but we're actually considering this move down through here in 3 waves down, or even a possible triangle pattern that we're following on the S&P 500 on the Friday. So we're still looking for a break to the upside, and that little bounce off the 13,000 here would be counted either, well, we could look at that as wave 1, a little A, B and C. Here's wave 2. We can see this little 5-wave structure impulsing to the upside here, so we'd need to be on top of 13,100 here for traders to be long there, but after 5 waves comes a B, C correction, and then you look for support on the market there. The S&P 500 is as pretty much the same as we were looking before, looking at this in terms of an A and a B, and possibly a C, D and E, a possible triangle, but we'll just stay with up for 1 and A, B, C back here for 2, and then this impulsing up here, so 14.10 on through here. So of course the other markets are going to follow this as well. We can see that little 5 waves on the FTSE, for instance, here as well. If I can just find that back in through here. So yeah, the little bounce here for the FTSE here, you can see on a 30-minute chart here from the subgroup 2 area here, the 72 we got up for 1 and back for 2. The third wave either to here or to here, but there will be some sort of correction within. This number here is very strong here, the 5772, so just be aware of that. So we're looking basically for 5 waves up through to here somewhere, some type of 3-wave correction through here, and then a push high here, and that would be in line with the Dow Jones as well. The DAX is pretty much in the same sort of boat as well. Just have a look at the bigger picture here for a moment. We can see that it's the same as the Dow Jones, slightly different, but we've got that 3-wave structure there. So once this market takes out this top here, then that confirms that being a 3-wave structure, because otherwise it could be down for 1, back for 2, down for 1 and back for 2. I don't think that's the case, because this move down here looks more like a 3rd wave, so it does appear that we have an A, B, C, D and E, and then working off from that point there. But you really want to be working from the 7,000 as a supporting role through here. So, you know, I can see in here this little 5-wave structure up through here that may be complete or maybe not. There may be another little high here, but yeah, wait for a nice test to come back on the 7,000 and build the trade from that side there. Just use a trend line support through here, I guess. So keep it under the 72 there. The Australian market is a little bit different. I might just have a look at on the daily chart first, so we can have a bit of a look here. It does appear that in a very sort of odd way, we've got a little 5-wave structure down through here. So we kind of got that there. So that means that this could be down for wave 1, back for wave 2 and 3, 4 and 5 down through there. So we need to be careful about that. But what I was sort of thinking is that this being a corrective move across here in terms of an A wave, a B wave, and depending on how high that B wave goes, then we'll see a C wave come back in through here as such, and then we'd see a move up. So basically from this high here, an A, B, C correction like that. That might be too simplistic, because this would be a wave 4 here, because we've got the strong wave 3 here. So wave 4s can come through in, well, that's where you get the complicated corrections, normally quite shallow, but triangles and double zigzags and so forth. So yeah, we just need to allow this to play out. So the main point here is that this particular move through here, this ABC through here, is going to be the tricky little number through here. So if we look at the Australian market through here, just from the top here, I've been counting through here. We've been looking at this as down for 1 and A, B, C for 2, down for 3, and across for 4 here, and then down for 5 here in 5 waves. And now we do have this A, B and C correction in through here. So we could, you know, if it fails to get back up above the midpoint here, the 43.50, then we could see the C wave come in which, as I pointed out just then, would be this little guy coming through here. So we may get this before we see any upside there. If I'm wrong, it's just better to trade the levels that way. The 43.20 here, this particular pivot within group 1 here, the 10, 20 and 30, it really needs to stay sort of above that as such. So look, you can just see that all of this here, this volume through here, is the supply here, and it is being really holding the market there. So you really need that 43.50 as support. You could try and get it in here early on the long side, but you are at risk. So yeah, but the base metals were up, so we should see further, at least support through here, if not a lot. But you just have to be careful. It's not going to race out of the gates to the upside. If it does move up, then you really want to find that support on the 43.50 and move from that point there. Okay, let's have a look at the commodities. Just starting with the US dollar here, obviously the driver for commodities, and we don't really have any evidence of any upside just yet. So we feel that there's a possible one more move down through here. So we need to consider one move down through here, which would obviously create one move to the upside for the gold and the copper. The oil will follow the S&P 500 to the upside. So we have to expect more downside through here. Obviously, the other thing that sort of pulls my mind is the 80 through here. 80 is the closest largest number, and the largest number tends to act like a magnet, so it's a major trading level here. So it is possible for this to extend down to the downside here, but the commodities don't appear to have that much to the upside as such. The gold market here, we were looking at this wave 4 here to wave 5 up through here. This little pattern through here was a corrective pattern, so we knew that there would be another push to the upside. That's really come in now to the upside, so that could be the top there. So it's either going to fold back through to here or hit onto the 1700, but one way or another, even if there is another little move through here, then it's going to have some sort of correction across the 1700 through here. So we just need to be a little bit careful about that, and you can sort of see that in the silver charts as well, with it gravitating to the 32 here, so it's creating the first high above the level. So we just have to expect it, because silver's been leading a bit with the precious metals. So we have to expect some sort of A, B, and C across here, some sort of corrective pattern. So that would bring the gold pattern back to the same thing here as well. So if it does touch on to the 1680 here, it could come low to test the real support here at 1672 here through here. So but we are expecting, and after a strong move, we have to expect a correction, and simply that's what's going to happen. The copper market as well, as I pointed out for the US dollar, there it can have another spike to the upside, and that would also suit this copper market as well, in terms of up for 1, back for 2, up for 3, wave 4 unfolding through here, and a wave 5 to the upside here. While the markets, well, there's different degrees of structure, of course. While the market was above 340, it was supported at that level. Above the 345, it's supported there. The 350 is a much bigger number. It's the midpoint between 300 and 400. So support on this would obviously give it some strength to the upside. We are expecting a possible spike up through here, but failing to find support through here. But it can certainly push to the upside, because all of this move through here is corrective. But we're considering this part of the triangle pattern through here. So have we still got that? Yeah. So this triangle pattern that we're looking for here, expecting a break to the downside on this, but coming back up and testing this trend line up through here, and and just having a poke at the 350 again, essentially. So and while the S&P 500 is expected to move higher as well in 5 waves, off the 1400, or the Dow off the 13,000, then that's going to give it a bit of support there as well. But we expect it to be short term there as well. The oil market is pushing higher, and it will follow the S&P 500 as well. and yeah, so all of this pattern through here, whichever way you look at it, is corrective, and certainly just being the simple fact of probing lower and then finding support back on the 95, the midpoint between the 90 and the 100, is a positive bias. That said, the 96.50 sub-level resistance and stronger resistance at the 97.72 and the 98 there as well. So what I was sort of seeing here, if it's going to follow stock, we would see this 5 waves to the upside, sort of completing in around here somewhere. There'll be 5 waves in this little structure if you want to pull that apart. We're in the 3rd at the moment. So there'll be the 5th wave here, an A and a B and a C, and then a push further to the upside. Now, that A, B, C there could happen closer to the 98 or across the 98. You'll just have to work it out when it gets there, but start counting 5 waves up through here. The Brent crude seems to be leading the way, and this particular pattern across the midpoint here, 1150, so the A, the B and the C here. So we should make new highs above here. There will be resistance with the trend line across here, of course, but you can start to count the 5 waves up here in terms of 1 and 2, then the 1, 2, 3, 4, 5 to the top of the 3rd, the 4th and the 5th, and then another A, B, C, and then a push to the upside. So yeah, so just keep an eye on that as well. Let's have a look at the currencies. Okay, starting with the US dollar here, you can see obviously that it's falling, and means the euro will be rising and following the S&P 500. However, we're expecting it to finish shortly, and this wave structure that we have here is we've been counting this A, B, C through here as wave 4 and looking for wave 5 to come down. Now, wave 5 may be completed already in this point here, or we can get another low here, and that's the problem that we have in the euro as well. When we have a look at the US dollar on a weekly chart, you can see the support here. This is a weekly chart here, so you can see that the trend line support coming into play through here, even though the closest largest number is the 80 here, and it can be drawn towards that, and especially when it normally does that when the 82 becomes the resistance through here, and it hasn't really been retested as resistance yet, but it could do it off the 81. But anyway, we don't really have any evidence of it moving to the upside. We're only tracking the wave count to the downside, and it hasn't shown any upside yet, so it's not completed. So that means we really need to follow the euro to the upside as well, while this is moving to the downside. But we are cautious that the wave count that we have down through here and the trend line support, but it also can be drawn to the 80 as well. So it's just sort of picking a few tops and bottoms here, which is always a little bit sort of dangerous. So when we're looking at the euro, let me just get this on track. Okay, so we're looking for this in the bigger picture as a wave 4 up through here, and we'd been counting the ABC for the A wave, the B wave here, and we're counting 5 waves up through here. And what we're trying to work out here is do we have this this top in play at the moment? So if we just expand this section here and coming into here, what we're thinking is that we've got this wave 1, wave 2, the wave 3, the ABC for the 4th here. Is that the top of the 5th here? It's a bit tricky because it spiked up through here, so that could certainly be the top there. Or we've got a little wave 4 to pull back here, and then a little move to the upside. So realistically, we can say while it's above the 125 is that the market is supported, and we should be trading on that side of it. And then secondly, we've got group 2 here with the 125.72 here acting as a reasonable support area there. So just squashing this up through here. So you can see that group 2's really got a hold of this. The stock markets, US stock markets, were closed, so volume is going to be a little bit lower. So it really boils down in terms of trading that you need to be on on support on 126, and if you're on support then you would scale in through the 10, 20 and the 30 here, looking for 30 as support. Well, if you're scalping, you normally trade to the 30, build into the trend, exit at 30, wait for support. If it's found after it bounces around between 30 and 20 and gets back on 30 as support, then you can move up from that side. So yes, looking for a 5-wave structure to the upside from this current low area down through here. So look, just use the 126 as the support or the resistance to trade. Long shorts would be the 125.72 as resistance there. So just using price to trade from rather than the Elliott, because we're not sure if those tops or bottoms are in just yet, but we need to trade on the right side of the closest largest number and then breaking that down from that point. So the Australian market, Australian dollar rather, is pretty much on track for what we've been expecting in the larger triangle picture through here, all the way through here, this large triangle pattern through here. So it's all sort of pretty much on track. We're going into the the E wave, as you know, and we're looking for an ABC pattern within the wave 4 here of this. So we're counting down here as wave 1, wave 2. We're coming into wave 3. We should expect a bounce off the 102 here. We'll drill into that in a moment though, but just to give you the bigger picture, the 1, the 2, the 3, the 4 and the 5 for the wave A, then the B wave, then the C wave here, which would make the larger wave E of wave 4 here. And once that wave falls in here, then we'll see a move to the upside. And I'm thinking that once that comes into place, base metals should be in the same picture as this. The Shanghai should match up as well, so we can see some upside there for the Australian side. Just breaking this down a little bit here is that the most important number here, well, the market's broken through the 103 here, but it hasn't retested it. So in this little section here, we've got 5 waves in here. It also reminds me that the RBA rate is out today at 2:30, and there's also the current account balance at 11:30 as well, which is expected to be a slightly more positive. So we should see a lift from this point here. So if we just scale in there a bit further, this is how I've got it counted coming down through here. So even though the trend is down through here, we're looking at this as 1, 2, 3, 4 and 5 in here, and then the A may go up further, the B and the C. Now this number here, as I mentioned before, the 102.72, is going to really start playing its role through here, and you'll see that. But yes, look, we just really need to expect an A and a B and a C, a counter trend of this particular move down through here. If I'm wrong here and it does move down through here, it's not going to go down very quick because it's moving into group 1, so the 10, 20 and the 30, so it's going to bounce around a lot, so just be careful about that. And also we need to expect a bounce off the 102 as well, because it was a previous low there, so you're not going to miss very much around this area here. So I would suggest that you allow the market to play out through here, and if it does become a really good support off the 102.72, we'll then trade along from that point. If you're going to trade up through there, well then you'll trade off the midpoint here. So just looking at this a bit more closely here, so it does appear that we've got the 1 down here, the A, the B and the C for the 2. This would be all of the 3rd wave down through here, the 4th wave and the 5th wave with 5 little waves in it. So we should be looking at some sort of retest, how far it goes back up, because the 72 can play a really strong part in this, especially when you get the 272 in here. So just be aware of that. But any long trade through here would require the midpoint here, the 102.50, as support to trade up through there. But you want to be taking some profit at 65 and some at 70, the rest at 72, and wait to see if it becomes a support that way. But generally speaking, the 103 and the bigger picture hasn't been retested as yet, but the 72 may do the job for the 103 there, as it was the low here as well. So just be a little bit careful around this area through here, but if that fails there, then we're looking for further downside to the 102 area. So that really just about sort of wraps it up. So in a bit of a nutshell, we're expecting the S&P 500 and the Dow Jones to move higher tonight. So we should be sort of following that. So our bias is to the upside, but cautiously to the upside. Alrighty, well, good morning and good luck.